A couple weeks ago, one of you posted a comment about what I think about Dropbox, and I responded that I thought it was fairly valued, but I didn't buy into their long-term story. However, I did some deep research on Dropbox over the past week, and let's just say things have changed. Now I'm a big believer in their long-term vision, and I believe it's one of the best investment opportunities out there. In this video, first you'll find out what I believe Dropbox stock is worth right now with my intrinsic value for the company. Then I'll describe the 3 key metrics in my bullish valuation, and I'll show you why I believe there are 2 underappreciated and massive opportunities that can unlock explosive growth for Dropbox. Finally, you'll find out why I believe Dropbox is a 10x investment opportunity. I think you'll really enjoy this video, so stick around until the end. If you enjoy a video like this one, give me a thumbs up and subscribe to my channel. It means a lot. I really appreciate your support. Despite fierce competition from Google Drive and Microsoft's OneDrive, the key metrics for Dropbox keep going up as they continue to grow. Dropbox's number of paying users, average revenue per user, and its operating margin all improve sequentially and year over year. Cloud storage may not be as exciting as it once was, but Dropbox's core business is impressive and it's still growing. And later in the video, you'll see why Dropbox is no longer just a cloud storage service. It's much more than that, with huge growth opportunities ahead. Dropbox's paying users have jumped from 10.4 million in Q3 2017 to 15.25 million in Q3 2020. This represents a 13.61% CAGR over the past few years in paying users. Average revenue per user has increased as well to $128, with Dropbox's ARPU growing at a 4.54% CAGR over the past 3 years. I use these growth rates in my 10-year discounted cash flow analysis to come up with my intrinsic value for Dropbox. On the Q3 earnings call, Dropbox's CFO, Tim Regan, said they are investing for double-digit revenue growth. To estimate revenue in 2030, I estimated paying users will grow at a 13% CAGR over the next 10 years, which means Dropbox would have 51.77 million paying users in 2030. I estimated their average revenue per user will grow at 5% until 2030, which means their ARPU would be $208.55. 51.77 million paying users multiplied by a $208.55 ARPU means that Dropbox would earn $10.8 billion in annual recurring revenue in 2030. The metric that really caught my attention and got me excited about investing in Dropbox is their long-term target for operating margin, which Dropbox predicts will be between 28 to 30%. Dropbox is already a profitable tech company, and it seems Wall Street analysts are ignoring how profitable Dropbox could be. 28 to 30% is a really high operating margin, and their new CFO seemed very confident on the earnings call that this target is within reach. With $10.8 billion in revenue and a 28% operating margin, my intrinsic value for Dropbox is $47.72 per share. With the operating margin at 22%, the median for software application companies, my intrinsic value for Dropbox is $35.68 per share. Dropbox is currently trading around $20 per share. This is my first valuation I've done where my intrinsic value is more than double the current stock price. Of course, for this valuation to make sense, Dropbox would need to earn around $11 billion in annual recurring revenue at a 28% operating margin in 2030. But this may not be as crazy as it sounds. There are 2 massive growth opportunities that Wall Street and other investors aren't paying enough attention to. The first is Dropbox's shift from a storage service to a collaboration platform for remote work. Or as Dropbox puts it, the old Dropbox kept your files in sync, and the new Dropbox keeps your team in sync. Their new collaboration platform is referred to as Dropbox Spaces 2.0, which is a virtual workspace that brings projects and teams together. With Spaces, teams can access everything they need for a project, like key files, tasks, meetings, and updates, all in one place. The 2.0 version of Dropbox Spaces is currently in private beta, and it's expected to be released in the beginning of 2021. In 2017, Dropbox signed a deal for a new 736,000 square foot headquarters, the biggest office lease in San Francisco history. However, in October, Dropbox announced they are moving to a virtual first way of working and subletting the giant space they lease to other companies. Dropbox employees now work from home, create their own hours, and only meet in person when necessary. The fact that Dropbox went from the biggest office lease in San Francisco to virtual first not only shows me that they believe remote work is here to stay, but that they believe Dropbox Spaces is the next massive growth opportunity for Dropbox. Timothy Young, president of Dropbox, said, "If we want to build the future, we need to live in it. We think that's going to give us a huge advantage for building software to support this more flexible way of working." Drew Houston, the CEO of Dropbox, said this about the Dropbox Spaces opportunity. "It's clear to us that in the long run, the shift to distributed work will be as significant as the shift to mobile or the shift to cloud. While we build products that help people work from anywhere, we know that all the tools people use at work today weren't truly built for distributed teams. We believe the world is permanently shifting in this direction, and now we have an opportunity to build even better products to address all the pain points we're experiencing. But we can only do that if we're on the leading edge ourselves. With Virtual First, we'll be a distributed team building for distributed teams." The second growth opportunity for Dropbox is HelloSign. Dropbox acquired HelloSign in 2019, and HelloSign is the fastest growing Dropbox product. G2 recognized HelloSign as the number 2 overall e-signature vendor behind only DocuSign. Dropbox doesn't reveal much about HelloSign in their financials, but look at DocuSign, who currently has a market cap of $43 billion. The e-signature market opportunity is big and only getting bigger as e-signatures are only going to become more common. Drew Houston said that HelloSign is a big opportunity for Dropbox, and they believe the HelloSign opportunity is still in the early innings. My valuation of Dropbox is definitely bullish, but I believe Dropbox could earn significantly more revenue in 2030 than my estimated $11 billion if Dropbox Spaces and HelloSign can become big products for Dropbox. Even with $11 billion in sales in 2030, if Dropbox trades at a price to sales multiple of 7 or 8, then you're looking at a 10x investment if you buy Dropbox as of this recording, where it's trading at a market cap of around $8 billion. Trading at a price to sales multiple of 7 or 8 is nothing crazy for a highly profitable SaaS company. Dropbox does have a lot to prove for my bullish story to play out, as Spaces hasn't launched yet and HelloSign is in a market with lots of competition. But it's one of my favorite investment opportunities right now. If you enjoyed this valuation, I'd appreciate if you like this video and subscribe to my channel. In the comments below, let me know if you believe in my story or disagree. As always, bulls and bears are welcome. Thanks for watching.